Welcome to Week 3, Topic 3. Here we will discuss Chapter 4 of your textbook, and we will be looking at an entire example of illustrative transactions and financial statements for governmental operating activities. So you will find that the coverage of Topic 3 is quite comprehensive, and it could be somewhat mind-boggling. And so I'd like to share this Bible verse with you right from the start. It's found in 1 Corinthians 13 verse 2. Now, some of you might know that 1 Corinthians chapter 13 is also known as the love chapter in the Bible. And in verse 2 it says, "And though I have the gift of prophecy and understand all mysteries and all knowledge, and though I have all faith, so that I could remove mountains, but have not love, I am nothing." Let's start with a word of prayer. Father in heaven, once again as we start this class, we want to commit ourselves to you. We need your wisdom, O Lord. We need your guidance as we delve into these topics covered in this lecture. Fill us, O Lord, with your Holy Spirit. Help us to learn how to love just like Jesus, and help us to learn how to use our God-given talents for the furtherance of your work. We ask this in Jesus' name. Amen. So let's get started by looking at the 5 learning objectives for this topic. In learning objective 1, we will learn to analyze typical operating transactions for governmental activities and prepare appropriate journal entries at both the government-wide as well as the fund levels. So learning objective 1 will actually cover the entire array of different transactions, and so we'll be spending quite a lot of time in learning objective 1. After learning objective 1, we will pause, and in the second part of the pre-recorded lecture video, we will discuss learning objectives 2 to 5. Firstly, I'd like to introduce you to the town of Brighton. This is the illustrative example that we will discuss for the entire Topic 3 lecture. So the common transactions and events that relate to the recognition and measurement issues arising from the operating activities and the appropriate accounting entries as well as financial statements are illustrated from the town of Brighton. You will see in this slide illustration 4-1, which shows the statement of net position, also known as balance sheet, for the town of Brighton. Now, in this balance sheet, the partial government-wide statement of net position is shown. So this is your government-wide balance sheet, and you will notice that it's just partial because we are only really showing the primary government, in particular the governmental activities. The business activities are omitted at this stage because we will cover business activities in future lectures. As you can see here, it shows that assets minus the liabilities, total assets 20,263,426, minus the liabilities 1,947,500 equals the net position, which is 18,315,926. So the format is assets minus liabilities equals net position. In terms of the fund balance sheet, all right, you will notice that the format of the balance sheet is cash. It's a total cash of 764,024, and we've got here the liabilities as well as the fund balances. All right, 764,024 is the total of their liabilities and fund balances. So the format follows the traditional balance sheet format. Cash is equals to liabilities plus fund balance. Now I'd like to point you to this unrestricted balance in the statement of net position. It's showing $408,024, and the fund balance unassigned in the fund balance sheet. It's showing $122,000. You notice that they are not equal. So there is a difference of $286,024. This is quite normal that the unrestricted fund balance in the governmental-wide net position statement is not equal to the fund balance unassigned in the general fund balance sheet. Mainly because two reasons that I can cite at the outset. Number one is that these two statements are prepared using different accounting basis. The governmental-wide financial reports are prepared using accrual accounting basis, whilst the funds are actually prepared using the modified accrual accounting basis. Another reason, other governmental fund types reported as part of the governmental activities here in the statement of net position may not necessarily be included in the general fund balance sheets, unassigned fund balance. All right? Just to recap, and before we go to the illustrative examples, I'd like to just point you back to the main differences between the government-wide statement of net position versus the governmental fund balance sheet. In terms of the focus, government-wide balance sheet focuses on economic resources measurement, whilst the governmental fund balance sheet focuses on current financial resources. In terms of accounting basis, government-wide uses accrual, whereas the fund uses modified accrual basis. In terms of the liabilities and assets covered, notice that government-wide considers both current and non-current assets and liabilities, but the fund level only considers and focuses on current assets and liabilities. All governmental activities are covered in the government-wide, whereas in governmental fund, only it focuses on the governmental funds, whether it is general fund, special revenue fund, and the like. And the net position format is the balance sheet format for government-wide, whereas the format used in governmental fund balance sheet is the traditional balance sheet format. What is the difference between the two? Remember, net position format uses assets minus liabilities equals net position. The balance sheet format that is traditionally used is assets is equal to liabilities plus the fund balance. I would also like to show you in advance that in the illustrative examples and transactions that we will be showing in the next few slides, we are using this what we call the dual track accounting approach. So what does this mean? The operating activities and transactions have different effects on the governmental-wide financial statements as well as the fund financial statements. Why is that? Because certain activities will have no effect on government-wide financial statements, and most operating activities will affect both the general fund and the governmental activities, but they may be affected in different ways. So in order for us to show you the different effects, we will show you the journal entries for both fund level as well as the governmental-wide activities. All right? So in showing you the illustrative examples, take note that we are using the dual track approach to analyze and record transactions, and this is based on manual accounting procedures. Now, this approach is designed when you're learning the transactions and how they are recorded. The dual track approach will facilitate easy understanding and learning. That's one reason. But at the same time, second reason is that it provides all the accounting information needed to prepare both the government-wide financial statements as well as the fund financial statements. Okay. Let's go now to learning objective 1. We will analyze typical operating transactions for governmental activities and will prepare the appropriate journal entries both at government-wide and at fund level. So first transaction here, journal entry 1. All right, what we are recording here is the budget in the general journal for general funds, so at the fund level. Okay, journal entry 1 will debit the estimated revenues of 4,086,000, and we are going to credit the total appropriations of 3,880,000. All right, so these are the two main figures that are provided. Now these figures are given. All right, so normally you will be provided with all the details of the estimated revenues for property taxes. So as given here, 2.6 million is estimated revenue for property taxes. For interest on penalties, 13,000. For sales taxes, 580,000, and so forth and so on. So normally you will be provided with these figures. Okay, so what you'll need to do is to total that up, and the total of that estimated revenues will be debited to estimated revenues account, and any appropriations for each of these different areas. General government, for example, they might appropriate 660,000 as given in this example. For public safety, they are appropriating 1,240,000. For public works, 1,090,000, and so forth and so on for each of these different areas. Okay, so the total of these will be your appropriations. So a total of 3,880,000 of the estimated revenues of 4,086,000 have been appropriated to general government, public safety, public works, health and welfare, culture and recreation, and miscellaneous. Okay, so we are crediting the appropriations account for the total. And the difference between the two figures, 206,000, will be credited to budgetary fund balance. So you'll notice that the estimated revenues are higher than the appropriations, and so the budgetary fund balance, the balancing figure of 206,000, will be on the credit side because the debit side is greater than the credit side. Okay, so that's our first entry, and that is to record the general journal for the general fund. Now let's move on to purchases and encumbrances. Purchase orders for certain supplies and contracts for services were placed with outside vendors in the amount of 59,090. So you remember from topic 2, whenever we've entered into contract with our suppliers, we will already get that amount to be encumbered. All right, so in this case, $59,090 have been encumbered. All right, and so our journal entry would be to debit encumbrances for year 2020, $59,090, and credit encumbrances outstanding for 2020, $59,090. We would normally also be given how much of that contract for supplies entered into pertains to the different government services. So general government is 18,500, public works 15,000, health and welfare 5,000, and culture and recreation is 20,590. So the total of that is the amount that you have encumbered. All these in the subsidiary ledger will be entered on the debit side. All right, so as you can see, whenever we are appropriating to these different areas of government services, we are crediting as shown here. So when we are appropriating, we're crediting on the subsidiary ledger. But once we have encumbered, we have already entered into the contract with suppliers, we are going to then debit those particular services of the government, all right, or programs or functions. So the total of that is the one that we have debited to encumbrances and credited to encumbrances outstanding. Now let's assume that only a portion of the supplies and contracts with outside vendors were filled or completed during the year at an actual cost of $21,700, for which the estimated cost had been $22,415. All right, so notice we have encumbered $59,090 in journal entry number 2. Some of that have already been delivered to us. The actual cost is $21,700, but the estimated cost for that was $22,415 as per the contract. So how do we enter that? Because we are now using the money that we have encumbered, all right? So remember, we debited encumbrances, credited encumbrances outstanding. So we'll need to reverse that once we have received the supplies. So encumbrances outstanding will now be debited and encumbrances will then be credited. For how much? It will be for the estimated cost of $22,415. Okay? And then we need to know as well how much of that is for general government. It says here $2,300. These figures will normally be given. Public works is $5,600, for health and welfare $100, and for culture and recreation $14,415. So the total of that will be $22,415. Now the next entry will be still in the general fund. Okay, by the way, these are all general fund entries. All right, the next entry would be to record the expenditures, because remember, we have now received the supplies. We have to record now the expenditures. So we'll debit expenditures 2020, $21,700. Notice that this is at the actual cost, the cost for which a liability exists with our suppliers. So we debit expenditures for $21,700 and credit vouchers payable. This is our liability for $21,700, the actual cost. Now in the expenditures ledger, we will also be recording each of these amounts. For general government is $2,300, for public works $5,500, because this is at actual, all right? Health and welfare $100, and for culture and recreation $13,800 instead of $14,415. So these figures are all actual cost, and this should have a total for the amount of $21,700, the actual cost incurred as liability to our suppliers. All right. So because we're doing dual track approach, right? We need to also know what is the impact of this in the governmental wide activities. So the first two journal entries are in what level? General fund. Journal entry 3B is actually the governmental activities entry. In the government wide journal, we will be recording this: a debit to expenses, general government for $2,300, this account that we have recorded here. A debit to public works, $5,500, this amount here. Debit also expenses, health and welfare for $100, the actual amount again. And debit to expenses, culture and recreation, $13,800. And our credit is to vouchers payable, which is exactly the same as how we entered it in the general fund, $21,700. All right, so you notice that so far there are transactions that affect both the fund level and the government-wide level, and there are transactions that only affect the general fund. No effect in the governmental-wide level. Okay, now the general fund wanted to purchase a new copier during the year to be charged to public safety. So it was ordered at a cost of $15,000. So what happens here? We now have a contract to purchase a new copier. All right, so in the general fund, we will be recording an encumbrance, all right, because we've entered into a contract. So we'll debit encumbrances 2020 for 15,000 and credit encumbrances outstanding for 15,000. And because it has to do with public safety, so we will be putting this in the encumbrances ledger, in the subsidiary ledger, a debit of 15,000 as well. Now, once we receive the copier, we will then incur a liability. The general fund will now incur a liability. And so, we were only asked to pay actual cost of 14,550, even though we have entered into a contract for 15,000. So we've saved $450. All right. So how will we enter this? In the general fund, we will then reverse journal entry 4A. Okay? Because now we have already received the copier, so we will reverse this entry, debit encumbrances outstanding, credit encumbrances for 15,000. And in the encumbrances ledger for public safety, we will then credit that for 15,000 at the budgeted amount, the amount at which we entered the contract to purchase copier. Also in the general fund, entry 4C need to be prepared. So this time we'll need to record the expenditure. So expenditures 2020 for 14,550, the actual cost. All right. So debit expenditures, credit what? Vouchers payable, because now we owe the supplier of the copier for 14,550. And in the expenditures ledger, we will also record under public safety a debit of 14,550, the actual cost of the copier. Now, in the governmental activities, we also need to make a journal entry this time. This time, instead of recording expenditures, we will record this as an equipment. Why is that? Because remember, governmental activities use accrual-based accounting. So the copier is a fixed asset, an equipment, not considered a supply or a current asset. So we will debit equipment for 14,550 and also credit the liability vouchers payable for the same amount. All right. So you can see here, we are applying the dual track approach. We are tracking what's the effect of the transaction in the general fund level and also in the governmental wide level. And what you'll notice here is because at the fund level, we use modified accrual-based accounting. So even a non-current asset like equipment, copier in this case, is considered an expenditure at the fund level. It is considered an asset at the governmental wide level because we're using accrual accounting basis at the governmental wide level. Okay, so far so good. Let's move on. Let's look at payment of liabilities. Now, the checks were drawn to pay the 341,700 balance of vouchers payable. So out of this 341,700, it says here that 320,000 balance was at the end of last year, 2019, plus the 21,700 that we have recorded in entry 3A. And there's also a $90,000 amount due to federal government at the end of 2019. So at both the general fund and the governmental activities, this would be our journal entry. So the same entry for both general fund and at governmental wide activities. Debit vouchers payable for the full amount, 341,700. Debit also due to federal government, that 90,000, and we credit cash of the total amount, 431,700. All right. Now, let's move on to the recording of payrolls and payroll taxes. The gross pay of employees for general fund departments is amounting to 252,000. Now, it says here that the town does not use the encumbrance procedure for payroll. So, there's no need to debit encumbrance and credit encumbrance outstanding. They are actually going to record the gross pay of the employees direct to expenditures. All right. So, we can see from here that the debit is direct to expenditures for 2020, $252,000. What do we credit? Well, we need to know the breakdown of that 252,000. So it says here, deductions from gross pay for the period amounted to 19,278 for employee share of FICA tax. So that's the Federal Insurance Contributions Act tax, FICA. So normally they will deduct that a certain amount from the employees, and the employer will also pay FICA tax on behalf of their employees. So the deductions from the employees is 19,278 for FICA, 25,200 for employees' federal withholding tax, and 5,040 for employees' state withholding tax. So what you'll notice here is that the total of the FICA tax and the employees' federal withholding tax, so 19,278 plus 25,200, will be owed to the federal government. So we will credit due to federal government, or it's just like federal government payable. So we owe the federal government the total of 44,478. All right. What about this employees' state withholding tax? So this will be due to state government or state government payable. All right. So we will credit that amount, 5,040. Okay. Now we need to know how much of the expenditures pertains to the general government, how much to public safety, and again, normally this will be provided. These figures will be provided accordingly, and it will have to be recorded as debits to subsidiary ledger in the expenditures ledger account. All right. Now, the difference, therefore, between the total amount in the gross pay of the employees, this 252,000, minus all this due to federal government and due to state government, will be your vouchers payable, the 202,482. Okay? So that is the amount that we owe to our employees. Okay. Now, in addition, the following entry would be required to record the payroll transaction in the Governmental Activities General Journal. Now, notice that this entry 6A that we did is from General Fund. So, in the general or in the governmental activities, which uses accrual basis, our entry would be to debit expenses in the general government, 35,040. Debit also expenses public safety for 156,120. Debit also expenses public works, health and welfare, and culture and recreation. You might ask, where are these figures coming from? Well, this is exactly the same figures that came here. All right, this one that we have used in the subsidiary ledger at the general fund level. Okay, so we're just using exactly the same amount, but we are recording it as expenses in your governmental activities journal here. Okay, so those are your debits to expenses, and then we credit the same thing. Vouchers payable, 202,482. Due to federal government, that 44,478, and due to state government that 5,040 that we owe from the federal and state government. Okay? The payment of the vouchers for the net pay results in entry 7 in both the general fund as well as the government activities journals. Once we pay, okay, we pay the employees, we'll now be debiting vouchers payable and will then credit the cash of 202,482. We take it from that figure. Okay? So once we paid the employees, your vouchers payable will be having a zero balance. Now, inasmuch as the town is liable for the employer share of FICA, notice that the one that we recorded before was the employee share. We deducted it from the salaries of the employees. Now, the employer share of FICA would also be the same, 19,278. So how does the town of Brighton record this employer share of FICA? So they will debit in the general fund, debit expenditures 2020 for 19,278, and because this is still to be paid to the federal government, so they will credit due to federal government 19,278. Also in the general fund, the expenditures ledger will be debited for the amount pertaining to that FICA. So part of that FICA's employer share comes from general government 2,681, from public safety 11,943, and so forth and so on. Okay. Now entry 8B will also be required to record now this time the payroll expense at the government-wide level. So at the government level or governmental activities, they will be debiting expenses general government, that amount there 2,681, expenses for public safety 11,943, expenses for public works, that amount there 2,230, health and welfare 1,460 will be debited, expenses health and welfare, and expenses culture and recreation 964. Those are the debits, and the credit will be the same due to federal government 19,278. Okay, so that is accounting for payroll and payroll taxes. Now let's move on to property tax levies. Now recall that property tax levy rates must be adjusted either upward for estimated uncollectible accounts or downward. No, actually, there's no such thing as adjusting downward. That would be nice if there is such thing, isn't it? So when it comes to property tax levy, most of the time, if we are expecting that we can only collect about 98% of our property tax levies, we will need to make an adjustment upward as to the estimate, the budgeted appropriations, or the estimate of revenues. So how do we do that? I'll give you a quick example in the next moments. Property tax revenue is actually an example of non-exchange revenue, meaning you get the revenue but you don't really exchange it for service, a specific service. So this is one in which the government receives revenue from people, from their residents, without directly giving equal value in exchange. So more specifically, it is classified under GASB standards as an imposed non-exchange revenue. When we're talking about imposed non-exchange revenues, then a receivable will be debited once there is an enforceable claim. And at the same time, a revenue is credited in the year for which the tax was levied. So for governmental funds, however, the revenue is recognized when it is measurable and when it is available. Measurability is quite easy to achieve because once you know, okay, how much can we impose or how much tax levy can we have. You can measure it already. The question now is, when is it available? All right. So the availability has to do with this, what we call the 60-day rule, which I will talk about in a short while. Okay, so let's look at the recording of property tax levy first and how much levy should be imposed. Okay, so we are looking at journal entries 9A and 9B here. So 9A is for general fund, 9B is for governmental activities. And what I wanted to point out here is how we get these figures. So recall from journal entry 1, if you can't remember, just go back to the slides, all right? But you would see from the slide in journal entry 1 that the estimated revenue for 2020 is 2.6 million. All right. Now let's suppose that in the past, the town of Brighton normally just collect about 98% of their total tax levy. And so the other 2% remains normally uncollectible. Okay. So the question is, how much, if they wanted to collect 2.6 million in terms of revenue, how much should they levy their residents? Well, this is how we calculate it. If you wanted to collect 2.6 million, but you can only expect about 98% being collected, all right? So you should divide 2.6 million by 0.98, by 98%, all right? And so you will get $2,653,061. And so that's the amount of levy, property tax levy, that you will have for your residents. And so what you're recording now is, in the general fund, you'll debit taxes receivable current, 2,653,061. So that's where we got it, right? 2.6 million divided by 98%. So that's the amount. And what do you credit? You'll credit the revenues for 2.6 million. That was your estimated revenue as per journal entry number 1. Okay, so what about the difference between the two? So the difference is that 2% that you are expecting not to collect, the uncollectible amount. So that's simply 2% times 2,653,061 will give you $53,061. And that would be credited to allowance for uncollectible current taxes. So this will be your contra asset account. Now you would have encountered this allowance for bad debts in your financial accounting earlier on, right? So this is similar, allowance for uncollectible current taxes. Now, still in general fund, in the subsidiary ledger for revenues, you will be putting their property taxes, and on the credit side, 2.6 million. All right. Now, in the government-wide journal entry, the governmental activities, you will be debiting the same taxes receivable current for the same amount. All right. And you will be crediting the same allowance for uncollectible current taxes for the same amount, 53,061, and the credit is for general revenues, property taxes, 2.6 million. All right. Remember that at government-wide level, we want to know which are general revenues. All right. So property taxes is part of your general revenues. Right. Now, let's talk about collection and reclassification of current taxes. Collections of property taxes levied in 2020 for the general fund of the town of Brighton amounted to 2,350,408. So they have actually collected not the entire amount of 2.6 million plus, but they have collected a fair bit, 2,350,408. We'll record this in both the general fund and also in the governmental activities, debit cash and credit taxes receivable current, 2,350,408. Now, let's assume this time that all property taxes levied in 2020 were legally due before the end of the year. And so any balance of current taxes receivables at year end is therefore classified as delinquent taxes. Okay? So they should have collected the full amount, 2.6 million something, all right? But they've only collected 2,350,408. So what happened to the rest? It's considered delinquent tax. So in entry number 11, we are going to reclassify these taxes receivable current, and we will now call them taxes receivable delinquent. Okay? So in both the general fund as well as in the governmental activities, we will be debiting taxes receivable delinquent 302,653. Where do we get that figure from? All right, so recall from journal entry 9A, how much are we expecting to receive? Taxes receivable current was 2,653,061. How much did we receive? Well, we collected only 2,350,408. So the difference is that 302,653, and that's now delinquent. All right. What else do we need to do? We'll need now to debit this 53,061 for allowances for uncollectible current taxes. So in journal entry 9A, we credited that. Now we are debiting it. All right. And what do we credit this time? We are crediting the taxes receivable current for the 302,653. And what we are crediting now, instead of allowance for uncollectible current tax, we will now credit allowance for uncollectible delinquent taxes. All right, for 53,061. Also in the general fund, we will be recording debit to revenues. Why are we doing this? Because we need now to reduce the amount of revenue. All right, we've recorded it as revenue before. Now we need to decrease the amount of revenue. So debit revenues 249,592, and credit this time deferred inflows of resources unavailable revenues for the same amount. And in the revenues ledger, we will be putting that under property taxes and a debit for the same amount. All right. So the reason why we've done that is because the town of Brighton does not normally collect a significant amount of their delinquent taxes early in the following year. So property taxes, being non-exchange revenues, are recognized in the general fund as revenue when they are measurable and when they are available. Now, take note of the word available. I'd mentioned this earlier. I said, what do we mean when it is available? Well, there is a GASB definition of available. And according to GASB, available means it should be available within 60 days of year-end property taxes. So, if they can actually collect these delinquent amounts within the first 60 days of the next year, it still would be considered available, and there's no need for reclassifying your current taxes receivables to delinquent. All right? But because according to their experience, they don't normally collect a significant amount of delinquent taxes early on, so that means there is a need for the reclassification, and therefore for the recording of journal entry 11A, where we actually reduce our revenues by that amount of delinquent, and actually reclassifying the net receivable as deferred inflow. Okay. All right. I know this is quite a lot to absorb, but this is the reason why I'm recording this, so that you can go back to it. All right. Let's look at accrual of interest and penalties. All right. So delinquent taxes are subject to interest and penalties. So if the amount of interest and penalties earned or imposed in 2020 by the general fund is, let's say, 13,320, and it's expected that only 10,800 of that amount will be collected. So in the general fund, we will be debiting interest and penalties receivable on taxes for 13,320, and we will credit allowance for uncollectible interest and penalties for 2,520, the difference between 13,320 and the 10,800. All right, and we will also credit deferred inflows of resources, unavailable revenues for 10,800. Now, in the governmental activities, the journal entry is similar with the exception of one thing. So we'll also debit interest and penalties receivable on taxes, 13,320. That's exactly the same. We'll also credit an allowance for uncollectible interest and penalties, 2,520. But instead of crediting deferred inflows of resources, we are crediting general revenues, interest, and penalties on delinquent taxes for $10,800. All right. Note here, all right, that the interest and penalties are initially recorded as deferred inflows of resources in the general fund. Rather than revenues, they are recorded as deferred inflow of resources. This is because of the uncertainty of collection of the interest and taxes and penalties imposed on delinquent taxes. And again, this is because of the 60-day rule. If we are using the 60-day rule to define available, and because it applies to property taxes, then we will have to record it as deferred rather than revenue in the fund level. Okay? So, many governments choose to apply the 60-day criterion even to other governmental funds because of the GASB recommendation. All right? So, if the collection were expected, then a credit to revenues will be expected. So this, instead of deferred inflows, it will be exact. So the general fund journal entry will be exactly the same as in governmental activities journal entry if collection is expected. Okay? All right, let's move to the collection of delinquent taxes. When taxpayers have paid delinquent taxes, what would be our journal entry? So suppose that the total payment of delinquent taxes is $207,330 plus interest and penalties of $7,200. Now this $7,200 consists of $6,800 that was recorded in the previous year, in 2019. All right? And the other $400, so $7,200 minus $6,800, the other $400 pertains to the period of from the first day of 2020. All right. So how do we record that $400 interest earned first? Let's go to the general fund journal entry. All right. So we will debit interest and penalties receivable on taxes, $400, and credit revenues, $400. That's just for the $400 that pertains to 2020. Okay. And in the subsidiary ledger, under the revenues ledger, we will also record a credit to interest and penalties on delinquent taxes. How about at governmental activities level? We will debit the same interest and penalties receivable on taxes, $400, and will credit general revenues, interest, and penalties on delinquent taxes for the same amount. Now, once the collection of the delinquent taxes and interests on penalties are to be recorded, how do we record that in the general fund? Let's look at the general fund entry first. we will be debiting cash. All right, where do we get that cash of 214,530? That's the full payment of 207,330, the delinquent tax, plus the penalties and interest. All right, 7,200 plus 207,330. What do we credit now? We credit taxes receivable delinquent for this amount, 207,330, and credit the interest of 7,200. Okay. We will also need to debit the deferred inflows of resources from unavailable revenues, 214,130, and credit revenues for 214,130. And you might ask, where did we get this from? This is actually the total of 207,330. That was the delinquent taxes paid, and the 6,800 interest for the previous year. All right, and we are crediting it also to revenues because it was not recorded as revenue, because remember, general fund uses modified accruals basis, and because they don't recognize the revenues until it is available, it's only in entry 14B that this is recognized as revenue. All right, and in the revenues ledger, it needs to be recorded accordingly. Credit to taxes delinquent, 207,330, and interest and penalties, 6,800. Now, in the governmental activities, the journal entry would be debit cash for 214,530, the amount of cash they received, and credit taxes receivable delinquent, 207,330, and interest and penalties on receivable and taxes for the full amount of 7,200. All right. If we have to write off the uncollectible delinquent taxes, how do we journalize that? It will be the same journal entry for general fund as well as for the governmental activities. So here we will be debiting allowance for uncollectible delinquent taxes of 26,300 as given here. So we got the approval to write off 26,300, and the related penalties and interest of 1,615. So we will also be debiting allowance for uncollectible interest and penalties, 1,615. And what do we credit? We'll need to now reduce the tax receivable delinquent account for that amount, and also the interest and penalties receivable on taxes for the same amount. Okay. What about other revenues? Under the modified accrual basis of accounting, if other revenues such as sales taxes, licenses, permits, fines, and forfeits, and the like are measurable in advance of collection and are available for current period expenditure, then we need to accrue them. So, suppose that the town of Brighton has collected 405,000 revenues in cash, all right, from the following sources: sales taxes, 145,800, and so forth and so on, licenses and permits and the like. So a journal entry in the general fund would just be debit cash, 405,000, and credit revenues, 405,000. Now, under the governmental activities, these revenues will be recorded as a debit to cash as well, 405,000, but rather than just crediting one revenue account, it needs to be credited to program revenues or general revenues. All right, and so with additional information, we will see that in entry 16B, the sales taxes are considered general revenues. So we have got sales tax of 145,800. It is classified as a general revenue, and that full amount of sales taxes, 145,800, is credited. Others, such as licenses and permits, fines and forfeits, charges for services, are considered program revenues. And so we will be crediting program revenues for general government, 100,000, and public safety, it says here, is 91,000, for public works 60,000, and for charges for services, other services for culture and recreation, is 7,000. So those amounts were credited specifically under program revenues. And finally, the miscellaneous revenues of 1,200 cannot be identified with any specific function, and so it's just recorded as general revenue miscellaneous for 1,200. So notice that at governmental activities level, we need to separate program revenues as well as general revenues because they are shown differently in the financial statement. Let's look at tax anticipation notes. So why do we need tax anticipation notes? When you are analyzing the cash receipt and disbursement pattern of the local government, it may reveal that cash available for the payment of expenditures might not be sufficient. So if they don't have enough cash, many will actually borrow from the bank as a result. Banks customarily will lend to these government bodies, and they are willing to accept the tax anticipation note because they know that being governments, will be able to receive taxes. Illustration 4-3 of your textbook actually shows this calculation. This city of Brighton is expecting to pay $1,380,000 worth in the first quarter from January 1st to March 31, 2020. And the cash that they're expecting to collect is only totaling $797,000. So that means they will be needing another $583,000, right? So what they can do is they will have to borrow from the bank. Instead of $583,000, they might borrow $600,000 just to make sure that they have sufficient cash there. So how is this recorded in the general fund as well as in the governmental activities level? So the journal entry will be the same. They'll debit cash if they are borrowing $600,000 and they receive the $600,000 from the bank. They'll debit cash $600,000 to increase their cash, and they will credit tax anticipation notes payable for $600,000, showing an increase in liabilities. All right. Now let's suppose that $7,500 in interest is to be paid once we have to pay the $600,000. All right. So in the general fund, our journal entry would be to debit the tax anticipation notes payable. So we now will be reducing the liability for $600,000, and we will now be debiting expenditures for $7,500, which is the interest, all right, that we have to pay, and credit cash of $607,500. And in the expenditures ledger, miscellaneous will be debited for $7,500 for the interest. In the governmental activities, we will also be debiting tax anticipation notes payable for the same amount, $600,000. And instead of expenditures, we'll debit expenses, general government, for $7,500, representing the interest that we paid, and credit also to cash for $607,500. We're getting near to the end of learning objective 1. So what happens if during the fiscal year comparisons have been made between budgeted and actual amounts, and we realize there are a lot of differences between the budget and the actual amount? Why is that? Perhaps it's because there has been different economic conditions that will result in possible reduction perhaps in grants from the state or federal government and the like. So there is a need to change the budget. So if the budget is legally amended, then appropriate journal entries need to be made. All right, so let's suppose that it was determined that the budget would be legally amended to reflect revenues from charges for services to be 15,000 higher or more than originally budgeted. And in the general fund appropriations, we need to make amendments that is to reflect a 50,000 decrease in appropriation for public works and an 80,000 increase in appropriation for public safety. So the journal entry would be in the general fund. All right, we will be debiting estimated revenues for 15,000. Where is that from? That's that revenues from charges for services that are expected to be 15,000 higher. So we will be debiting estimated revenues to increase that 15,000. We will also need to credit the appropriations because these general fund appropriations have been changed. 50,000 versus 80,000, difference of 30,000, right? And which one is higher? Well, the increase in estimated revenues or the appropriations would be 30,000 difference, right? And so the difference between the estimated revenues of 15,000 and the appropriations of 30,000 will be 15,000, and that would be debited to budgetary fund balance. All right, so the budgetary fund balance is the balancing figure here. Because our credit is greater than the debited amount of estimated revenues of 15,000, then the budgetary fund balance need to be decreased by the same amount, $15,000. All right. In the estimated revenues ledger, the charges for services, we will be recording in the subsidiary ledger a debit to 15,000, and in the appropriations ledger for public works, we will be debiting 50,000. Why is that? Because we are showing here a 50,000 decrease in appropriation for public works. And for public safety, we are showing a credit of 80,000 because there is an 80,000 increase in appropriation for public safety. All right. Now, when we receive goods that we ordered from prior years, how do we deal with that? Purchase orders and other commitments may be issued in one year while the goods and services are received in the following year. So, in this case, the encumbrance account is not closed at year end. So, when the goods and services are provided, they are considered an expenditure of the previous year to the extent of the amount that was encumbered. All right? So, how do we deal with this? Let's assume that all goods and services for which encumbrances were outstanding at the end of 2019 were received in 2020 at a total invoice cost of $127,250. So, in entry 20A and 20B, we are showing the general fund journal entries. So, what are we doing here? It says, by the way, that the estimated amount for that was $227,000. So the journal entry would be first to debit the encumbrances outstanding for the previous year, 2019, and credit encumbrances 2019 for $127,000. Then in the encumbrances ledger, let's say this is for culture and recreation in 2019. We'll put it in the subsidiary ledger credit of $127,000. Now, we are in 2020, and this is when we actually pay for this $127,250 because we received it in 2020. So our journal entry would be to debit expenditures for 2019, $127,000, and the difference, the $250 that is received in 2020, we will record that as expenditures 2020 for $250. And the credit would be to liability account vouchers payable for the total of $127,250. In the expenditures ledger, we will be splitting up the culture and recreation debit to subsidiary ledger. 2019 would be $127,000 and for 2020 $250. All right. Now in the governmental activities, we will be debiting expenses, culture and recreation for $127,250 and vouchers payable will be credited for $127,250. All right. We will pause here for a while. I know this has been quite tedious, so have a break and come back for PLV 3B in a short while.